Hey guys, welcome back to another video slash stream. Today we're going to be talking about the fall of regional banks due to the Silicon Valley fall, and we're also going to be talking about Meta, Tesla, we're going to be talking about Microsoft, and we're going to be talking about upcoming earnings and next week. Okay, let's start off with some regional bank news. Okay, so regional banks fell this week on Thursday after earnings, mostly because of the Silicon Valley fall and citizens panicking about small banks and their credibility in a way because of that fall. So we're gonna see like a really big transformation of bigger banks and moving from smaller banks, regional banks, into bigger banks like J.P. Morgan, Goldman Sachs, and yeah, just the biggest, and also Bank of America. So like, the biggest banks, we're gonna see like higher earnings as we saw last quarter. The latest earnings, we saw really nice earnings from J.P. Morgan and Bank of America. Even though there is some falls in some areas, overall they are doing better. That's a lot have to do. A lot of it has to do with that moving from smaller banks, smaller regional banks, into these bigger banks here. So okay, let's go a little more into here. Okay, so Keyport and Truist, for example, and Fifth Third, these are three small level banks. They're regional, and their quarterly profits just came out on Thursday, and they did pretty bad. Only Fifth Third actually beat expectations, but Keycorp and Truist, which are regional banks, they fell and they missed their what's it called? Their expectations, the Wall Street expectations. So we are seeing that as a result of the Silicon Valley Bank and like that whole collapse. Okay. So we have an analyst talking about it right here. The fact that results were not going to be very good had already been factored in. So they're already expecting this since, Silicon Valley has been, it already happened a while ago. And I think that in general, people knew that there was going to be a big transformation of regional banks. And still, right now, there's still a lot of trouble with smaller ranked banks. And they know that it's going to continue falling here. So KeyCorp shares recovered from early losses, with shares moving 4.1 higher. The bank's profit plummeted 50%, and its forecast a decline in its net interest. It's the decline in their net interest income, and they're expecting it to decline in the next quarters and the upcoming months. Let's look a little deeper here. So Truist, which we talked about earlier, declined 7%, and they missed their quarterly earnings. And average deposit at Truist fell 2% sequentially as customers continue to chase higher yields alternative for better returns. So they are looking for better banks, and a big problem with these smaller banks is that they have to pay more to keep these customers in their deposits, and that's also really affecting their earnings right now. So Fifth Third actually is one regional bank that actually did well on their earnings, and their shares rose 2.6%, and at top expectations. Okay. So analysts, they have warned the banks that they would need to raise their interest rate for their clients on their balance sheets, bringing deposit costs in focus for the remainder of the year. Higher cost of deposits would also lead to lower NII growth at a time when loan growth is muted and margins were likely to stay compressed due to it. So this is also another analyst talking about the bank situation. Okay, and that's it for now about the smaller banks. We're going to be talking about the bigger banks here. We're going to be talking about the second quarter of banks, but bigger banks specifically. So let's go into net interest income. For those that don't know, right here is the explanation for net interest income. The difference between what banks charge on loans and pay out on deposits. At the largest U.S. lender rose on higher U.S. Federal Reserve interest, interest rates, but analysts caution that the benefit might soon fade as the central bank near the end of its tightening cycle. Okay, now let's talk about investment banking. So investment banking actually did pretty poorly on most of the bigger banks, but Bank of America actually outperformed its rivals regarding investment banking, and they did pretty well. Yeah, so overall they all did pretty well on their earnings, but Bank of America just outdid all of them regarding investment banking, and yeah. Okay, let's talk about deposit levels. Deposits at most large lenders edge lower. The cost of retaining deposits is under investor scrutiny after bank runs led to the collapse of three lenders earlier this year, leading customers to move their cash to big banks or higher yielding alternatives. So, as I said earlier, a lot of people are panicking regarding the Silicon Valley collapse. So, they are moving their cash to bigger banks, which is, as I said, a big problem for the regional smaller banks. And we are seeing that the bigger banks are doing a lot better. So we just kind of see like that consolidation of where the money is going right now. Let's continue here. All right. So regarding the commercial real estate, the loans are actually doing still very poorly right now. The whole commercial real estate still hasn't recovered since COVID, and that it's bringing a lot of anxiety to centers around office loans as financing costs rise for many buildings, and I've seen big vacancies as staff continue to work from home. So we are still seeing that COVID result, and it still has not changed yet. And maybe there will be in the future, but the Feds are still looking very hawkish right now, so we may see that later. Okay. Okay, next we're going to be talking about Tesla, and in general we're going to be talking about the Tesla earnings as well as the Netflix earnings and what we saw in the market as a result of that. Okay, let's start off with what Elon Musk said at earnings. Okay, so on Wednesday, Elon Musk was talking about how they depend a lot on Nvidia and their hardware and their products and their chips, and how like they are not able to keep up with their demands anymore because Nvidia at the moment, they are coming out with a lot of chips, and because of the AI hype, there is Nvidia is getting stressed out from its consumers right now, and there's just too many orders, and they aren't able to keep up with Tesla's. And they aren't able to keep up with their consumers, especially Tesla. Tesla is specifically, Elon Musk is getting concerned about Nvidia not able to keep up with their demands. Okay, so let's talk about what Elon Musk said here. So we're using a lot of Nvidia hardware, Musk said during their earnings call. We'll actually take Nvidia hardware as fast as Nvidia will deliver to us. Tremendous respect for Nvidia and the CEO. They've done an incredible job. Okay, so they were down here on Wednesday. Okay, so according to Elon, Nvidia has too many customers vying for its products, and while the company has prioritized some of Tesla's orders, Nvidia can't provide as many chips as the electronic automaker requires. Tesla has worked with Nvidia for years, and the electric automaker already runs a Nvidia-powered supercomputer, but because of the boom in AI, demand for Nvidia chips is pressuring customers like Tesla. So let's see what Elon is going to be doing as a result of this. What he's going to be, maybe he's going to replace Nvidia completely. To address this, Musk says Tesla is building its own supercomputer called Dojo that runs on custom silicon. The company says it's beginning construction of the machine this month. Okay, so for anyone joining on in, we're talking about Tesla and and its connection to Nvidia and how they're kind of vulnerable because of that, and what Musk may be doing to not be vulnerable and not depend on Nvidia as much. So over here, Musk is discussing how he's going to be building his own supercomputer. At least maybe, he doesn't know for now. He says that we're going to be talking about later what he says, but he's planning on making his own supercomputer called Dojo that will be able to replace Nvidia. So we may see a big rise in Tesla because of his plans for the supercomputer. If NVIDIA could deliver us enough GPUs, we might not need JoJo, but they can't. So he's saying here that if NVIDIA can keep up with their orders, he may not need to like finish the project or, even continue with that at all or even implement it or anything. But because they can't, he may be forced to do that. So NVIDIA is benefiting handsomely from the AI boom, and its growth is unlikely to slow anytime soon. Tesla's need for NVIDIA and its own hardware also points to the wide breadth of the AI market and variety of use cases that range from Musk's pursuit of self-driving cars to smart home systems. The current explosive interest in AI kicked off when OpenAI debuted its ChatGPT generative AI chatbot in November 2022. One of the fastest growing apps in history, ChatGPT started a generative AI revolution. Microsoft, which is investing billions in OpenAI, used the company's technology in its Bing chatbot and Edge web browser it launched in February. So here we're just talking about how the AI boom led to a lot of companies already jumping in, such as NVIDIA, which is gaining a lot from this, and it's actually kind of screwing over Tesla. We see Microsoft is already getting heavily involved in AI and its technology. Let's move down here. Google, parent Alphabet, follows that news with its own AI announcement during its Google I/O conference in May. Meta is already working on its own generative AI capabilities, and according to Bloomberg, Apple is also developing its version of the technology. So you kind of see some really big companies already getting heavily involved in AI. So talk about Microsoft, Google. We see Meta being heavily involved in AI right now, and we're going to be talking about Mark Zuckerberg again very soon. And what else here? Also, Apple is developing its own technology, so we're going to be expecting a lot of more AI hype in the future. And because of this AI hype still in the market, there's a lot of expectations regarding earnings, and everyone wants to see this AI do very, very well. And if they don't see exactly what they want to see, then the market starts to drop. So we kind of saw that with Tesla and their earnings. Even though Tesla's earnings were great, we saw Tesla drop a lot because it didn't meet people's expectations, and that will continue in the future with Google, Meta, and Apple, and Microsoft, really, because they're all very AI heavy, and people are expecting a lot from them. So if they don't deliver, then the market will start dropping. Okay, let's go to Mark Zuckerberg and Meta. So we were just talking about Meta and how they're heavily involved in AI, and we're going to be talking about that a little more here. Okay, so Meta and Mark Zuckerberg are, they're growing a lot right now. They have big wins going on. As you can see, the guy in the sector tossing big wins on the board for 2023. So the stock was driven up 150% year to date, which is amazing, really. It's that's a big accomplishment from him, and that's heavily due to AI. And we're going to see a little more on what he's planning on doing with Meta and why it's growing. Okay, so regarding Threads. So Threads this month was very strong. Millions of people engaging with it and signing up. But we are seeing a slowdown here, which is, expected. But, overall, it's growing. It was an amazing accomplishment, and even though it is slowing down now, it won big time. So it's one of the reasons why Meta is really doing well right now as well. Okay, so Wall Street analysts have slightly pushed up their 2024 profits estimates for Meta on expectations of Thread monetization. So we are seeing that Wall Street is also recognizing Threads and how it can connect to Meta and its profits. So we are seeing more expectations here. As I said before, AI and all that hype is leading just to higher expectations, higher profits, and just higher estimates. Okay. Meanwhile, Meta joins forces with Microsoft this week to introduce its next generation open source large language model, Llama. Unlike Amazon, Meta is right to the heart of the AI discussion. So we see Meta jumping in right into AI with Microsoft. That's huge, really, because they're teaming up with a really big company who's also really interested in AI and working together on that. And Amazon says, unlike Amazon, Meta is right in the heart of the AI discussion. So we see Amazon is not really interested in as much as other big companies right now in AI. Okay, both new projects show that Meta can still innovate on stuff that moves the financial needle today, and this innovation is coming amid a significantly streamlined cost base for Meta. The company has fired a lot of people in the past year. This aggressive cost cutting, I've been told, has freed up teams to move quicker, which is a win for innovation. For investors, lower costs and more new products are a simple equation that totals more profit flowing to the bottom line. So we're seeing here that Meta did fire a lot of people, but most of the time that shows not great things about the company, and it's worrying for investors. But it actually worked out well for Meta since they were able to cut costs while also bringing out a lot of new products, and that's obviously a lot more profit. Meta is the comeback story of the year, as Zuckerberg has gone from a villain on the street to now a ticker tape parade in New York City. So we are seeing Zuckerberg really come back here. Okay. Okay. We expect Meta to accelerate revenue growth in 2023, given the combination of easy comps, higher engagement from AI investments. So we are seeing a lot of higher engagement from AI investments right here. Once again, really big on the AI, and we are probably going to see growth about that. And increasing advertiser return on investment and efficiency. Road Jeffries analyst Brent Thill. So we are seeing analysts once again really see a lot in Meta, and we're still seeing a lot of growth even in the future in AI, and a lot of analysts are not seeing it die in the near future. And yeah. Okay, and with all that momentum, it seems the biggest problem for Zuck and Meta is that the street knows all of this. Witness the move lower in Tesla and Netflix on Thursday, and we could see the bar has been raised for tech leaders this earnings season. So we are seeing, once again, as I said before, the bar is being raised for tech leaders, and people are having a lot of higher expectations for big tech companies, and all this AI hype is really leading to that. So one of the big reasons why Tesla fell, which we are going to be looking at their at the chart soon. One of the big reasons why they fell, even though they did well on their earnings, is because the bar has been raised, and that's really important to see here. So we really don't know how well investments are like when entering a market like that, and it's pretty risky. Risks are high. Risks are high. Street expectations. Any change in tone on expense discipline or potential management caution on 2024 capex, given optimism on AI benefits, said Bank of America analyst Justin Post in a client note. So, yeah, risks are very high regarding this quarter and next quarter, anything in between, because any change in tone on expense discipline or potential management caution can really lead to like really bad market movement, like to the downside, and people are just not going to see it. People have a lot of expectations for it, and if they don't meet expectations, the market is going to drop. Phil also sees important risks to Meta's bull case, flagging unknowns around ad spending in the macro environment, expense guidance for 2024 that may come in high, and user retention that could disappoint with Threads monetization delayed. Current guidance is looking for an annual revenue growth below 12.5% in the third quarter. Okay, let's look a little bit on the Tesla earnings right here. So we see on June 2023, they beat EPS by 11.12%, and they beat revenue by 0.81%. So they did have really good earnings. But let's take a look at their charts. Okay. So right here is their earnings, and they beat earnings, but we do see a really steep drop here. And as I said before, people's expectations are very high. Even though it did beat, it still had a really big drop here. And we can also see that on other markets such as SPY and QQQ. Let's take a look at SPY. Okay. So you can see right here yesterday's earnings with Netflix and Tesla. You can see a really big drop here. We did see some recovery after market, but it was overall a negative day for SPY. Okay, let's look at QQQ, which is a very an index that's very technology focused. Let's take a look. Look at that drop. It was crazy jump, a crazy spike for QQQ yesterday because of those earnings. You could see these huge red candles going down here. Huge negative for the market. Let's take a look at the Netflix earnings. So they beat EPS by 15.15%, which is great. Revenue they missed by negative 1.24, but I do not think that the market should have responded as it should have due to these earnings. But we did see, like as I said, there's a lot of expectations and it didn't meet. So this is as a result. And as I said in the Yahoo Finance post, it's very risky right now to like being like enter stuff like this. None of this is financial advice, but from what we see, it is very risky right now. So here, let me just go back to it. Yeah, so risks are high, street expectations. So the risks are very high right now. As we saw, even though it did beat earnings, it's supposed to do very well. We did see a big drop here. Okay, lastly, let's just talk a little bit about Microsoft and their growth here. So Microsoft, you know, they teamed up with Meta with AI, which is great for both companies, obviously. But another Microsoft win here was that they were able to take Blizzard. So this is huge. I mean, they're acquiring a gaming developer, Activision Blizzard, a major win for the tech giant. So this is really big for them since they're going to be one of the top companies that own the gaming world in a way. And Activision Blizzard is really big regarding the Call of Duty. So we see a lot of Call of Duty franchise developer, and they just kind of have control of that now. And yeah, so Activision Blizzard is the largest game publisher in North America. In addition to the hit Call of Duty franchise, the company also offers World of Warcraft, Diablo, and Overwatch. The firm also owns mobile game publisher King, the company behind Candy Crush. So we really see that they do own a lot here, especially the Call of Duty franchise, which is really important and really big. I mean, it's really popular around the world, really. And now that Microsoft owns that, as you can see, Global Gaming Council market share, 25.3% of the gaming market belongs to Microsoft. Okay. And yeah, all right. So we're gonna be looking at a heat map here to end it off. So Microsoft is down a little bit today. Google is more or less evened out. We are seeing that the tech sector is mostly green, which is great. I mean, mostly makes sense, but we see that Netflix is still down today, even after their earnings. And the electronic technology sector, once again over here, doing very well. Nvidia a little down today. Apple mostly evened out. You know, the markets are very green for today, and we actually it's an overall trend right now. The economy is doing very well. We see a slow growth, which is great. So no signs of recession really, other than those regional banks shutting down. But overall, we are seeing good economic growth. And here, let's look at upcoming earnings for the week. Okay. Okay. So right here, this is all the companies, upcoming companies for earnings. Earnings on Friday, July 21st. Right here. Let's look at a little bit into next week. What's happening next week? Let's look at July 30th. Okay. Okay, so nothing really special coming up. Nothing really special coming up. So yeah, nothing to really look out for at the moment. Not at least that I know of. And yeah, that'll be the end of the stream.